So dear colleagues and friends, distinguished guests, welcome to the 24th Central Bank Economic Modeling Workshop organized by the Central Bank of Chile and the Better Policy Project. This workshop was first launched by the Reserve Bank of New Zealand in 1998 after having developed a model-based forward-looking forecasting and policy analysis system to provide technical support to the flexible inflation targeting scheme. Since then, the workshop has moved across central banks to connect and share its modeling efforts with the work of academics. This has been precisely the biggest challenge of the last decades to economic policies and policymakers that has proved once again being a key element of support to firms and households and containment against the advance of the pandemic. No country has been immune to or exempt from the economic effects of the pandemic, while policymakers worldwide have been challenged to articulate effective and timely responses. In the next 3 days, 108 academic papers will be presented, distributed across 30 sessions. In addition, we will feature 2 high-level keynote presentations and a policy roundtable. The topics of sessions include important and traditional matters for central banking, such as financial markets, the Phillips curve, monetary policy, and financial stability and capital flows, as well as sessions dedicated to the most recent issues such as pandemics and economics, quantitative easing, and economic policy in times of COVID-19. This is a very important occasion for the Central Bank of Chile, as we pioneered the adoption of inflation targeting among emerging economies. We conduct our monetary policy with a combination of rules, transparency, and institutional autonomy, expressed in a conceptual framework of forward inflation targets. This was initially declared in 1990 and fully adopted in September 1999, along with a flexible exchange rate regime. After more than 20 years of application, the inflation targeting framework has proven its relevance for the Chilean economy, allowing our central bank to manage its monetary policy independently with an inflation target that has averaged around the target and inflation expectations at a 2-year horizon that have remained anchored to the 3% target for much of the last 2 decades. It has also allowed the country to mitigate the effects of major external shocks, such as those observed during the 2008-09 global financial crisis and the most recent COVID-19 pandemic, and face significant domestic shocks, such as the earthquake and tsunami of February 2010 and the social crisis of October 2019. Today, the value of this policy framework is reflected in stability of prices, the anchoring of inflation expectations, the resilience of the economy even in the face of large-scale internal and external shocks, and a battery of liquidity provision and extraordinary credit measures that prevented the crisis caused by the pandemic from transforming into a financial crisis of longer duration and a heavier burden to society. The central bank operates with an expected inflation targeting scheme for a horizon of up to 2 years that recognizes the lags with which monetary policy affects activity and prices and reduces GDP volatility, limiting the effects of temporary fluctuations in inflation in line with the constitutional mandates that our organic law confers to us. This scheme also underscores the importance of exchange rate flexibility that allows the currency to adjust in the presence of real shocks, reducing the risk of sustained deviations of relative prices. Under the floating scheme, the central bank retains the option of intervening in the foreign exchange market in exceptional circumstances with the aim of limiting overreactions that could jeopardize the price and payment stability objectives of the central bank without having as its final objective a specific level of the exchange rate. In order to achieve the high level of credibility and trust on the part of the public, the central bank recognizes the central role that transparency and communication have in an inflation targeting scheme, in which future inflation expectations are key in determining the contemporary evolution of it. The ability to convey the rationality of the inflation projection and how the central bank responds is essential for the credibility of the policy and the central bank's commitment to price stability. The adoption of the expected inflation targeting framework has brought important benefits for the central bank. First, having applied this framework in a disciplined way over the years creates more space for adequate policy responses. It makes a big difference to face this scenario with stable inflation, low exposure to foreign exchange risk, a deep capital market, and a solid financial system. Today, there are many countries that face global turbulence with severe restrictions in some of these dimensions and difficulties in this recovery phase of the cycle. Fortunately, Chile is not one of them. Second, this framework allows monetary policy decisions to be made with greater certainty regarding their effectiveness. This occurs either because the operation of buffers complements the policy actions or because their pass-through is more effective. In this regard, the role of the exchange rate flotation in cushioning external shocks and the relevance of a sound financial system for the efficient transmission of monetary policy stand out. Finally, the medium-term perspective that characterizes the monetary policy framework in Chile helps to minimize potential conflicts with other objectives, especially those related to financial stability. In this regard, the value of a medium-term inflation target is highlighted to avoid excessive volatility in policy decisions and to reconcile price stability with the stability of economic activity. This is reinforced by focusing short-term inflation monitoring on different measures of core inflation, excluding the more volatile and less persistent price fluctuations that may obscure the inflation readings for policymaking. In short, I underscore the importance of research as a foundation of modern monetary policy and for the legitimacy of independent central banks in performing their broader mandates. This is ingrained in the daily work of the Central Bank of Chile, reflected in our current strategic plan, within which intellectual leadership is recognized as one of its 5 main pillars. I would like to thank our friend Douglas Laxton for organizing this workshop, as well as Sofia Bauducco, Jorge Fornero, Benjamin Garcia, Emiliano Lutini, and Andrés Samsone for being our local counterparts, as well as Maria Jose Reyes and Victor Mix from the Central Bank of Chile for their invaluable help managing the challenging logistics of this workshop. I also thank our keynote speakers, panelists, presenters, and participants for making this workshop possible. I thank you and wish you a fruitful discussion over the next 3 days, sorry.